Hey everyone, welcome to our newest webinar from Silver Hill Funding, how to navigate today's mortgage market. Really excited to talk about this with everyone today. See, we've got a large number of attendees, people still filing in, so we're going to go ahead and get started. I'm joined here by Joe Altamonte, our head of business development. Hey Joe.
Hey Zach, and thank you everybody for your time today. I think you'll find this very helpful.
Great, yeah, I think so too. What we're going to do is we're just going to quickly talk about who we are. Maybe you already know, maybe you're new. Quickly give that overview and then launch right into what we want to talk about, which is diversifying with commercial loans. Such a hot topic today. People transitioning into more of the non-QM space, people learning more about commercial, and then of course our traditional commercial brokers just leaning even more into that space. So hopefully there's a little bit for everyone here, and we'll do a poll in a second to see exactly who's here and perhaps tailor some of what we talk about to what we see there, like we usually do. So anyway, Silver Hill, if you are a commercial broker with us, you've been closing loans with us for many, many years, then you know exactly who we are and what we do. Our audience is bigger than ever now because we have residential solutions as well through the Silver Hill Wholesale Network. So welcome, hello to everyone coming in from that side. Really great to have you here. Hopefully you find this presentation really helpful too, especially if you're not as familiar with commercial loans or perhaps DSCR loans. So with the Wholesale Network, you can see we have solutions within the baby family. So agency solutions, conventional solutions from Lakeview, and our non-QM slated products from Community Loan Servicing. These brands together make up the Silver Hill Wholesale Network. Today, we're focusing on our commercial and DSCR products, as you can see in the orange box. So, not a surprise to anyone on this call, we're in a very interesting point in the market today. And so we're seeing this every day. I'm assuming we all get the same newsletters in our email every morning. In our inbox, we're seeing updates here pretty much every day where we're seeing that rates are rising. So Silver Hill, we're very familiar with this kind of environment. What happens in these times when there's rates are going up, opportunities going down, low inventory, we've got a larger number of professionals hunting after a smaller, shrinking number of loans. So as I'm sure you've seen with other lenders in our space, the product set expands. And this is a really good opportunity for people who are interested in small balance commercial or who thought they might get into it, but didn't really have time because there's so many other loans to do. Now people are sort of transitioning into that space. So if you're already closing commercial loans with us, I think you're in a really great position. And if you are thinking about making that transition now, it's really a great time because that is what everyone is looking at doing today. So with Silver Hill, if you've known us for a long time, for years, we have sort of preached the value of small balance commercial. We've helped thousands of professionals close their first commercial loan through the years, and of course continue to do that today. So I believe that we're a great option, both for those experienced commercial brokers who are just looking to get the best deal for their client, and those who are new, trying to get some education and then use that knowledge to expand, diversify their business. So that's where we are going to talk about. Have two quick testimonials here. I think pretty much anyone in our space would talk about expertise. That's a claim that a lot of lenders could make. But I think we really do have the right to say that. Been doing small balance commercial loans for a very long time. The people here have been working here for a very long time, very passionate about the business, passionate about our brokers. And I think if you've closed loans with us in the past, you would agree that we take this very seriously. We know the ins and outs of these deals and their complexity, frankly. We're going to go into that a little bit in this deck. But I think that, again, if this is a space that you're kind of looking at learning more about, I think Silver Hill not only has that information, but teaching, the educational aspect is important to us. And we really like to see mortgage brokers take that knowledge and then close their first deal. And of course, then close the second and third and fourth, hopefully all with us. So moving on, why diversify? It's always a good thing to do, but in these kind of markets, of course, it just the attention is a lot greater. And so what we see when mortgage brokers expand their business to include commercial loans, once they feel comfortable enough to do them, and they understand which type of loans go to which types of lenders, they start seeing this type of success. And that means a larger client base. Weirdly enough, some of your first loans might be within your existing client base, but over time you'll expand that through various means like advertising, using the promotional materials that we provide, things like that to grow your market. You'll be able to reach more people. Of course, with your stable income flow, you might be in a position where you'll do commercial loans all the time. Maybe you'll just do one or two, or maybe what happens a lot is that you'll just stop saying no to them. Maybe you're not going to be actively looking for them, but they will, figuratively drop on your desk, and you won't refer them elsewhere. You can do them yourself. Maybe that's what you're thinking about doing commercial loans. And then just finally saying yes more often, that's a great thing. And I think when we show you the product set that we have and how that is sort of a spectrum for borrowers, you'll see that there's really an opportunity to say yes to a much larger group of borrowers than you might think. So with Silverhill, we've touched on the options, the flexibility, and the expertise. I think for us, what it really comes down to is having a solution, especially when it comes to investors, that really meets various types of needs. Where typically for us, we see a lot with documentation flexibility, where you have the investor who is not willing to produce tax returns versus that borrower who is and is simply looking for the lowest rate. So we try to have everything covered there. And this makes a lot of sense too on the residential side with some of our other solutions also, where you have options that are more conventional and then options that require more flexibility. And our whole goal for doing that is for you to come to us with a scenario and not necessarily even knowing the answer. Like, this is the person, this is what they want. What do we have for them? And then our team is that's like all the information they need. They can give you those options and we can find something that best fits them. And that's what I think is really cool about the kind of products we're offering today. It's more focused on like who your borrower is, what the scenario is, and then finding the answer to that particular problem. Because I think we're all solution oriented around here. So with that, as I mentioned at the start, I just really want to quickly get the pulse of the crowd we have. We have a lot of people here and the number is still growing. So I think if we want to see you've got a largely commercial audience, then we will kind of, we won't be afraid to use some acronyms, so to speak, and go into more the nitty gritty of the program. And if you've got more residential group, then we can take our time explaining some of the important parts of commercial lending. So I just think it's helpful to get a sense. So I'm going to launch that right now. And our question is simply, how many commercial loans have you closed in the last 6 months? So we see usually a big spread here. People are doing them all the time, and then there are always going to be those professionals who do 1 or 2 a year, which is perfectly fine, especially if you want to do them with us. So it's going to be a few seconds here. Okay, I see still moving, just a few more seconds. Joe, I think you might be a little surprised here. So it looks like just a touch over 60% have not closed a commercial loan in the last 6 months. Oh, so wow. What that tells me, yeah, so that's really interesting and awesome, because I think this presentation is really geared toward you if you answer it that way. And I think you're going to learn a lot here, and that's great. And so, Joe, maybe we won't use quite as many acronyms as we might, because there's like no one uses acronyms more than commercial lending. So we'll be sure to dive in a little deeper into certain aspects for educational purposes. And so thank you to everyone who answered. I'm going to close that. And I think what's nice about that is of course we have this presentation, but we have so many other tools that you'll find helpful. So we'll be sure to show you where to go and what next steps to take, because this is really kind of a first step. And there's so much more and so many different other ways we can help you. And if you are closing, we had quite a few also saying 1 to 5, which is great. And what I definitely don't want to do is go over content that you already know. so you feel like this isn't a great use of your time. I know there's so many other things you could be doing during these next 45 minutes. So we'll be sure to add as much value for you as well. So with that, Joe, we'll essentially what we're going to do is we're going to split up these tactics in a DSCR and small balance commercial. I think especially for a lot of the residential audience joining us, you're seeing this everywhere today. A lot of lenders are just kind of launching these programs. The good news about ours is we've had this around for years. We're very familiar with these products. And when Joe explains kind of how they're underwritten, you'll see just that strong connection to commercial that makes a lot of sense to do them with Silver Hill. And he'll explain kind of what that means and how we look at these loans. But with that, Joe, let me get to the next slide and you can take it away.
Thank you, Zach. And I believe Zach mentioned this at the beginning too, but for people that joined us a little bit further into the program, if you want to type in some questions in the chat, we can also address them typically towards the end. But even sometimes if Zach's monitoring them and something's very relevant, we can take them during the presentation. So don't be afraid to ask questions and chime in. So with that, it's important to understand the profile of the borrower that we typically deal with on the commercial side of things. So we talk about folks that don't necessarily have the ability or the desire to walk into a bank and go through the paces that a bank might put you through for commercial transactions, such as tax returns, controlling cash out. We'll talk a little bit about that later, but our cash out policies are a little more lenient than you might find at many other lenders, especially with the Small Business Administration. Borrowers that want a long-term solution. There's a lot of competition out there for commercial even, not quite as much as for residential, but even so, many of the competitors that we find, we don't really consider many of them competitors because they offer different types of loans, short-term loans, bridge loans, construction, fix and flip. We're not in that game, but we're in the game where we can take those particular borrowers and put them in a long-term solution once that short-term situation is taken care of. And of course, borrowers for the investor situation, they exceed the agency limits on a lot of the residential products. And with our programs, we're only concerned with our borrowers' exposure to us, and we're not concerned, at least from a commercial standpoint, on how many mortgages they have elsewhere. So when we talk about debt service coverage ratio, we have the DSCR program, and that covers 1 to 4 family homes and all investment. And so how it works typically is we are only concerned with the income of the property. So when you hear DSCR, for some of you that answered, I haven't done any loans, you might fall into the category of what does DSCR stand for? It's debt service coverage ratio. And in a nutshell, it simply means the ability of the property to pay for itself through the income that it generates. And the income that it generates basically through market rents. And do those market rents cover the cost of the principal, interest, taxes, insurance, and if applicable, association fees? And that's what PITIA is there on the bottom. Now, what you're all used to is that DTI mark that really becomes problematic when you're dealing with borrowers that are experienced investors, have a lot of properties, have a lot of mortgages, have a lot of credit cards that they use for expenses and repairs. And next thing you know, their debt to income is through the roof. We don't run a DTI on these programs. We are running a DSCR on the property, and therefore we can underwrite the deal in that manner and oftentimes be able to close it. At the end of the day, if something goes sideways on the loan post-closing, we are collateralized by the property, and that makes us as whole as possible. God forbid we ever need to take that property back.
Yeah, and thank you, Joe. And you can kind of see with this description how this solution is a good fit for like investors to use the properties for Airbnbs, which is a big part of this solution. So thank you for that. And moving on here.
Yeah. So our guidelines, I'm going to, by the way, Zach will be distributing this to all attendees and in fact, all registrants. So you'll have these items and the grid here that you can use as a reference. But just to highlight a couple of things. First of all, loan amounts, we're very rigid on the $100,000 minimum. The $2 million maximum, we can bend a little bit there. The better the deal, the more chance we might sneak a few in over 2 million. A couple of things. Aggressive LTV, 85%. We can actually go down to, I believe, a 0.75 DSCR. It says 0.8 on the screen, so if we're being conservative, 0.8 we'll go with today. We'll make sure that that's accurate before this goes out. But again, very flexible terms and the ability to get this done. We allow buy downs on the rate. So if you're trying to be competitive and the borrower does have a little cash to play with, that is a possibility as well. And one thing about the DSCR through Silver Hill Funding is that it's underwritten and processed and closed as a commercial loan. That means that you avoid the TRID regulations. The disclosures go out the window as far as a residential loan is concerned, and your ability to be compensated is more flexible, meaning you're not constrained by the comp elections that you have, say, with our sister company, Lakeview Wholesale. And you can make up to 5 points on these programs between a combination of upfront points and yield spread, even on the DSCR program. And I think I'll reiterate that when we get into the commercial programs in a few minutes.
Yeah, and thank you for touching on that, because someone asked just a minute ago, like, hey, wait, I thought this was about commercial loans, and here we're seeing residential investment properties. Like, is that what you mean by small balance commercial? And so that's why. Yeah, we see these loans as commercial in the way that you're able to get paid, and of course the underwriting kind of reflects a similar process as a commercial. In a few minutes, we're going to go into our actual small balance commercial type loans, which are the multifamily, the office or the warehouse, the restaurants, those kind of traditional mixed use, those commercial properties that you probably have in mind. But that's how we label it. Other lenders, they group DSCR into their like non-QM bucket as an example. So that's how we see it. And that's why we're covering both in this presentation. So thanks for mentioning that, Joe. Moving on here.
Perfect segue.
Yeah.
Wait, and that's, that really underscores why the difference between us and other DSCR programs that are out there. Here's, you like to put faces to names when you meet people. We're putting pictures to loans, and these are a good collection of 2 to 4 family homes that we've done on a DSCR basis. A couple of highlights on each of these. You'll notice they're all 30-year fixed. That's because all of our DSCR loans are 30-year fixed loans. I want to point out also the rates on each of these loans. So the top 2 look a lot better than the bottom one. The bottom loan actually looks like it's the strongest borrower, highest DSCR, almost a 2. So they're certainly cash flowing, but the rate's considerably higher than the other 2. One major factor in that is the timing of the closing of the loan. The market was just different when the last loan closed than it was with the first 2. But it does highlight that if the borrower still sees that he can cash flow from the property, the rate becomes less important. Not unimportant, but less important. Sure, he probably would shop around and say, let me make as much as I can, but we're very competitive with the rate, and oftentimes we are going to be in the top of the heap. And again, don't shy away from, as the rates inch up a little bit, if you can see a DSCR that fits, that borrower may be willing to close that loan regardless.
Yeah, and that's another reason why these loans are very similar to, in our view, to commercial loans, because each one is different, and you really, it's solution oriented, and of course every borrower is rate conscious, but every loan is different, and ultimately when Silver Hill is providing a solution, it's going to be a unique one for a borrower with a specific need. So of course rates are always a big factor, but in environments where rates are rising across the board, focusing on small balance commercial and DSCR is also wise from that perspective. Is that at the end of the day, these borrowers are looking for different things, and the rate may not be the factor that decides whether they'll take it or not. So Thanks for touching on that. So diversification tactic number 2, grow with small balance commercial solutions from Silver Hill. Joe, if you can just keep on going. Now we'll transition over to our traditional small balance commercial business and the various products we're offering there.
Yeah, and this is what we call our core programs, and they're really designed, again, for that wide range of investors, but they're small business owners who can or won't work with the traditional means of financing. And Zach mentioned this earlier, and it bears repeating, is that this is, as far as a market out there, a great opportunity to diversify in a way that's not, you don't have to have a doctorate degree in this stuff. We are experts in this field, and so we can definitely walk you through your first couple of transactions as much as you need until you're ready to take the training wheels off and do a little bit more on your end. But great opportunity here to add something to your product set. So small balance commercial, SBC, at a glance. Again, loan amounts are the same, and the same caveats around exceptions around the loan amounts. We have many of different programs. We'll line them up for you in a second next to each other so they're easy to categorize in your head. We are pretty lenient with our cash out policy, and might as well touch on that now. If there is equity in the property and the borrower attests that the purpose of the loan is for business, we are not going to generally control the funds. There will be language in the contract that may say we have the right to check the financials on a yearly basis, but we typically don't exercise that clause. Do want to be transparent that may be there, but that's not unusual. So keep that in mind. And just from an experience standpoint, we are very lenient, at the processing of the loan with the cash out rates. Now, somebody wants to, they just want to upgrade their roof, repave their parking lot, replace windows, do a lot of capital expenditures that improve the property, but the property is inhabitable and usable and doesn't need to be rehabbed. That's a good use of funds. Basically, we're asking that you don't take the money, go to Atlantic City, stay up till 3 a.m. gambling, sleep till 3 in the afternoon. That would probably not be a good way to spend your money or your time with these particular loans. Eligible property types. Now, if you stick with this list, you're going to be have the best chance of success with Silver Hill funding, right? So if you go outside of this list, you'll find that you have you're going to meet yourself with more no's, maybes. Why don't you try these guys? So a couple of these that I'll pull out, the general commercial properties, office, retail, warehouse, self-storage, those are, cut and dry commercial properties. Those we love to see. Multifamily. Mobile home parks are typically nice properties. We don't do the mobile homes individually. We do the entire park. Restaurant bar, a big carve out with the restaurant bars. We are financing the property, not the business, not the furniture, fixture, and equipment, not the liquor license. So good a good question to ask early on in the process if somebody approaches you with a restaurant. What are we financing here? There are options for them to get financing for liquor licenses and furniture, fixtures, equipment. We're not it. We're the commercial lender that'll do the real estate. On the flip side, we do not lien their furniture, fixture, and equipment. We don't put a lien on their liquor license. What those are typically called are UCCs. And that, in short, just means that we're going to encumber all that stuff. We do not do that. So keep that in mind. If a borrower is wary of that, we're not going to have the ability to go get, we'll take the property. We think we'll leave them with the ovens and refrigerators. We don't know what to do with them anyway. So some benefits to that: broker-friendly pricing, meaning we do not, as a lender, charge points. We do have fees, but we do not charge points. So I mentioned earlier, you have up to 5 points. We allow up to 3 front-end points that's disclosed on the settlement sheet that the broker or the borrower will sign a fee agreement for. We also allow you to buy up to 2 points yield spread, like the good old days. Up to 2 points with the 3 points origination gives you the ability to make up to 5 total. That's not overly common because you want to stay competitive, but again, you can change the broker fee structure on a loan-to-loan basis. You're not constrained by your comp elections, so that's something to keep in mind. You have a very good borrower, you want to be competitive, you can work lean. You have a borrower that's been a challenge and you've been trying to get them financing for 6 months, you make it worth your while. So that's how I would approach that as well. We do have a prepayment penalty on all of our programs. We can do a number of different lengths of prepayment penalty rather than put them in front of your borrower and say, hey, which one do you want? They also affect the rate a tad bit each way. The better question is, how long do you plan to be in this property? And based on the answer, is the prepayment penalty you want to go with. The longer, obviously, will get you a lower rate. The short prepayment penalty gives a borrower better freedom to get out of a deal earlier. So base your recommendation on the answer to that question. I'm going to be here forever. Okay, great. Let's just plop a 10-year prepayment penalty and we don't worry about it. Or, hey, I don't have a crystal ball. What if someone comes to an offer in 2 years? All right, well, let's go with a shorter prepayment penalty. Okay. And then we'll talk about some of our alternative document options, meaning bank statement and no doc as well.
Great. And just a few points I'll touch on here. A long time ago, an account executive said it really well about property eligibility in commercial when he said, think in terms of boxes. And I was like, well, what do you mean by that? But if you think about the types of property you see there and what we can do versus things we don't do, like golf courses or like swimming pools or kind of other special use properties. Like if you think about it that way and look at more traditional commercial buildings and types of buildings and sort of roughly box shape, like that's one good way of thinking about the things that we can do. So that was explained to me a long time ago, and I think it's kind of helpful. Someone asked you about retrading, and what that means is that when you lock in the rate with us, there's certainty tied to that, which you don't get everywhere else, especially when rates are changing as fast and as often as they are today. We feel like that's a pretty good benefit with Silver Hill in that, once we have the loan with us, you can feel certain about that's where it's staying, and same with the borrower can feel certain as well. Any little bit of certainty in 2022 is a really good thing. So we want to call that out and make sure our brokers feel confident when the loan gets to that point that it's going to stay that way. So that's why we mentioned that here. We will move on to the borrower profile. Joe.
And very similar to what we talked about with debt service coverage ratio. In fact, I think I was talking in general then about small balance commercial borrowers in general. Okay, they just missed the bank or the SBA eligibility, or frankly, if any of you have ever dealt with somebody or dealt yourself with the Small Business Administration, sometimes it is a conscious decision to avoid that route based on the technical term coming here, rigmarole that they put you through. So, they do have programs that no one else will do. They do have financing for things like furniture, fixtures, equipment, and business loans and so forth. But sometimes borrowers will be glad to hear about another option. Tax returns, of course, always a consideration. And, when you ask about their tax returns and borrowers start talking in terms of, here's the thing, then you know that some alternate document solutions might be best for them. Okay. And
yeah,
everything we talked about earlier. Go ahead, Zach.
Yeah, no, I would just add that maybe the only difference here is when you talk about DSCR, that's investor only solution. So really those are investment properties by definition of the program. But for our borrower profile here, we're going to present to you investor solutions and also owner occupied business owner type solutions as well. So you're thinking about, of course, like so many of our deals are investor deals with multifamily properties. That's a very common one for us. But you're also going to get that operator, that restaurant owner, that person who's actually working in the property. So you can think about it that way. So you kind of split up between our kind of owner occupied solution and our investor solutions. So moving on.
Right on. So this is what how we pretty much categorize our loans. If you want to take the left side, and you think about your buttoned up borrowers. Tax returns are there, and they have the ability to, show bank statements. Their credit's great. They're just any operating statements, anything you ask for, they have ready for you. Full doc program will be the best option for them from a rate standpoint. We often can go that way for those borrowers. However, I would say the majority of our borrowers end up on the right side, a combination between light doc, no doc, which should have an asterisk there, and as far as no doc is concerned, and I'll explain that in a second. And then our bank statement program, which is really excellent solution for those owner-occupied businesses.
Yeah, and if you're looking for, and Joe's going to go through, but like I think 2022 also is all about niche building or identifying and trying to find that area where you can do something that no one else is doing in a way that you can stand out, even if you're not necessarily going to do a ton of it, even though just the, and so I of course I work in marketing, so I'm all about, personal branding, things that you can say about yourself that no one else can say. And so if you want to talk about something that you do on LinkedIn that other people can't, it stand out. Think about that bank statement for commercial, because that is an uncommon solution in the commercial space. And I think that it really is an interesting one to talk about. So of course, I think all these programs are very good. Joe's going to talk about each of them, and on the next screen, you'll kind of see them all together. But think about the bank statement program for commercial, and that's kind of an interesting one to go out to market with and talk about. So anyway, Joe, I'll let you go on here.
Yeah, so we're going to go through every single block on this this slide in grave detail. I kid, Zach. So great overview. I would even...
I was hoping you would.
Yeah, we need to reserve a couple more hours for that. But what I will say about this slide, and I'll touch on some highlights here, but I will tell you that when you get this presentation, this is a great slide to pull out and put in to your Silver Hill folder as a great reference point. Now, the great news is your AE at Silver Hill will be able to, through experience, guide you towards the program that is likely best for your borrower, collaborating with you. You know your borrower best, they know our programs best, and those conversations should result in aligning that borrower with the right program. The good news about that is, between full doc all the way over to no doc, the rate difference all the way out is typically around 1%. So, to go no doc streamline is not necessarily clobbering the borrower over the head with a high interest rate. It's simply adjusting for the fact that we're not bolstering the file with as many risk reducing documentation. So keep that in mind as well. You'll notice that on most of these, we'll do anywhere between 15 to 30-year loans. The DSCR, which is not listed here, we only do a 30-year amortization. And all of them are, on the DSCR underwriting methodology in one way or another. I will talk a little bit about no doc streamline, because I said there was an asterisk there, and it's not that that's a misleading name from an underwriting standpoint. It's that we want to prepare you so that you can prepare your borrower, that the appraiser may ask for things like leases and rent rolls in order to complete their review and valuation of the property. So if you're, quoting a no doc streamline program, and somebody calls your borrower and says, can you forward me some leases? And your borrower calls in and says, well, I thought this was no doc. You'll have your answer ready, or even better, you can set that expectation going in that, hey, setting up the appraisal, the appraiser may contact you and request documentation so that they can properly value your property. And that's the thing I'll point out there. You can buy rates up and down on all of these, and you'll note the prepayment penalties, many options for most of your borrowers on all of these, and flexible DSCRs across the board. The light doc, we go a little bit higher, but depending on the borrower, right across the board, we can go as low as even 1.0 on some refinances. So case by case, best advice I can give you is walk these scenarios that you get through with your AE, and they will price this with you using our pricing model that someday soon will be available for you to use on our website. Population. Typically speaking, with the exception of DSCR loans, which again are not on this slide, we're looking at eligibility within the top 300 MSAs. We can worry about tier 1 and 2 when you get these properties, but the short story is we do not like to see rural properties, farmland, agricultural properties. We need buildings, and we need a reasonably populated area, put it that way.
Yeah, and a good pre-screen tip that I've heard a lot is just to simply run a Google Earth search, just seeing where this property is as you're kind of collecting the information, and we'll tell you all the information that you'll need to have at the start. That's one thing to look at. It's just like, where is this located? Is this a property kind of in a rural location or more urban? And like Joe said, one of the key things that we will not do are overly rural properties. So as the last thing I'll note here is just what you touched on with talking to the account executive. Later on in the presentation, we'll give their names and I'll show you how to get contact information. That's really like what you want to do. I know some people say, oh, why can't I just price this out? As you see with all these commercial deals and sort of how unique each scenario is and the different solutions we have available, for me, I would think that the best thing that I would want to do is get the deal, have the deal in hand, talk to someone, an expert, and say, like, what is the best solution based on these 8 bullet points I just gave you? And then our team, they're, of course, they're so intimately familiar with each program, they could say, oh, that's a great fit for NoDoc. And then maybe you go down the process and something doesn't work. Then it just naturally becomes a nice fit for a different one of our programs. So that's the nice thing about having a kind of a complete set like this, and also a nice reason to create that relationship and conversation with your partner on the Silver Hill side, because you can really just focus on having this scenario, and that account executive will be able to put it in the perfect bucket to ensure that approval and funding. So, Joe, I'll let you get back to it here.
Awesome. So some great examples of what we're talking about. Zach, explained what the AE told him about what these properties look like, and this is pretty much it. I don't want to say nondescript. In fact, the middle one looks like something that ordinarily can be a little bit rich for our blood, but it fell within our parameters, and we were happy to do it. And so was the broker, if you can see his commission there. In fact, all of these brokers walked away and probably bought dinner for a bunch of people after these loans closed. Pretty nice loan amounts here. Even on the $532,000 loan amount, the broker made some money. So there's a good examples right here of differing ways to structure your fee. And I'm remiss if I did not say this, and pardon me if I'm repeating myself, but your upfront fees are paid on the settlement sheet. The yield spread does come afterward and is not disclosed on the settlement sheet. So it's your ability to close a loan with a slightly higher rate and make a little bit of extra money on the back end. I will tell you, do not put all your eggs in the yield spread basket, because and they often do, things change throughout a commercial loan process, like values and loan amounts or DSCR ratios. Sometimes the way to fix that is to lighten up your yield spread, and the DSCR magically becomes acceptable. If you don't have upfront fees, and plus your borrower will probably look at you a little weird if you're not charging them any money. We're not volunteers, so they're expecting you to charge some money up front. Yield spread is gravy, and sometimes we need to eat the potatoes without the gravy to make the deal work. So keep that in mind. To repeat something Zach said earlier as well, is these loans that you're looking at right here could be in the files in your office. He mentioned that these are already your borrowers, self-employed borrowers that you've done refinances on their primary residences, have these properties, maybe want these properties. So, you don't have to go far to find a couple of leads today.
Yeah, one of our sort of greatest hit tactics that we've been talking about for many years for originators looking to get into commercial is to review those past applications you have and look at that other real estate owned category, because you're just going to see these borrowers, maybe help them with their home. They also happen to own something else. And when you kind of remember that commercial loans are refinanced far more often than a home is, these opportunities kind of present themselves. And so I would suggest that as a first tactic if you're looking to break in, before you go out and create some large LinkedIn advertising campaign or spend money elsewhere. See what's just kind of in your files already, and you may be surprised at the opportunities there. I had a question about comp, about what the limits are, and it looks probably from someone more familiar in the residential space, and you can just see how it's different. What you're really the limit is what the borrower is wanting to do and what you're able to do, and you can see the loan amount has a lot to do with that, because we're talking about points and percentages. And so you can see here each of these loans, the broker made a very good amount of compensation on each one, and that's just possible depending on the types of loans that you bring in. So we've got more, Joe, on a slide just in a little bit that covers that a little more detail, but I think it's helpful to kind of see it in practice here and see how that looks. So thank you for sharing that. With that, this one's going to be very quick, so bear with me. Our second poll question, our last poll question as well, launching it right now. Are you seeing these types of scenarios today? And to recap, we've shown automotive properties, multifamily sort of apartment building properties, so office buildings in Atlanta, a lot of those. And then also some of those single family investor type properties. And so are you seeing these today? And of course, I kind of knew what the answer would be, but it's being proven out here. I'll give a few more seconds. And as I mentioned, those investor properties, like this kind of Airbnb situations, they see all the time, those kinds of deals. And so, Joe, I'm going to give it a few more seconds, but we've got about 70% saying yes. And literally, of course, I know as soon as I say 0% saying no, someone's going to say no, but I just said it. Oh, there it is. Yeah, sorry. Now there's just only 3% saying no, which means a lot of people think they might be, but they'll need some help knowing just like how to determine which is which. Which when you kind of notice or remember our first poll question makes perfect sense, because if you drive from your home to work, you're going to pass just every single property type that we do. But how do you know necessarily that's going to be a great fit, or who the borrower is, or what kind of loan they need? There's some more education involved, and as I said, that's kind of what we specialize in doing. So we'd be very excited to help you take those next steps. I can close this out now. Thank you for everyone completing these polls. It's super helpful for us. It kind of helps us steer this conversation in a way that's most helpful to everyone. So I do appreciate that. Okay, Joe. I think you've got one or two more.
Let's incent you more to do business with us. So we have some offers going on right now, an additional 50 basis points on all no-doc loans, and that's free money for you. So it really gives you the ability to make technically yield spread without having to bump the rate up. That's always great. And then for borrowers, so what's in it for your borrower? You have the ability to lock in a free appraisal on all no-doc loans. So free to them, not to us. So we're footing the bill for the appraisal for the ability to get those no-doc loans in. So you can read between the lines and say, hey, Silver Hill's trying to really generate a lot of business for the borrowers that don't necessarily have the ability to get financing through the bank or through the SBA.
Perfect. We've seen a lot of people taking advantage of this promotion. This is probably our most recent, our newest program, even though it's not new, our newest, and we've seen a lot of brokers take advantage, and this promotion is making that even easier for people to get started, and that incentive is even better. So very happy to see that.
Cool.
Here you go, Joe. Broker benefits.
Perfect. This is point structure is really what we've been talking about quite a bit right here, and there it is spelled out for you. So I've mentioned it a couple times. You might have written notes, but again, there it is, 5 points. So that's the maximum. So do math. I think that's I'm not going to do math right now. 5 points on $2 million is a lot of money. Let's put it that way. So 3 in origination, 2 in yield spread, and average that we see our brokers charge is typically between 2 and 3 between a combination of the 2 E's to make money. Okay. So also with that yield spread is the payment is outside of closing. So the yield spread payment, that is. So you're the only one seeing that yield spread payment, and it'll come about a week or so later. Zach will talk to you before we leave you today on how we, unless he wants to talk about it now, make personalized collateral for you to use around your referral sources.
Yeah, okay, I can talk about it now. That's one of the things that we really like doing is helping brokers have them get the materials they need. Marketing is expensive. Marketing takes time. There are tools out there, but you have to know how to use them, and frankly, you have to pay for them. So we understand that. And in the commercial space, you're so busy wearing 38 different hats that we want to kind of do a little bit to help in certain areas when we feel like you'd see the value. And one of those is marketing stuff. I've got a great marketing team here. You see our materials all the time, hopefully, and we want to give you those. And so that means social media posts, that means flyers, that means product sheets, everything that you'd like to use to market yourself. We make those available in neutral colors, so you're not beholden to our silver and orange as much as we like those. We know you've got your own logo, your own branding, your own company. We want to make that easy for you to adopt and personalize. We'll show you where those things are. Another way to get access is simply to ask your rep, and they'd be happy to give you everything. You can ask me too, and we'll give our information at the end. But that's one of the key things that we like to do to help you, especially if you're new. Because you say, well, I don't even know how to position this. Well, we do, because there are products. And so we can give you the positioning information you need, and then you can tailor however else you want, because it's going to have your name on it. So that's a little bit of just a little Kickstarter there to help.
Right on. The process, we strive to make it as easy as possible. Those of you that have experience with commercial loans know that every loan they're snowflakes. They're all different, and so sometimes some loans go more smoothly than others. So LOI, that's another acronym that might not be familiar to the 60% that said we haven't closed a loan lately, commercial loan. That's letter of intent. For all intents and purposes, that is like a pre-approval letter in the residential world. So, upon receipt of that, we go ahead. Typically, if we're not running the promo on no doc loans, all we ask for is a $500 deposit that goes, for all intents and purposes, towards the cost of the appraisal, but towards costs in general. And then the appraisal cost will be reconciled at closing. But that only gets charged if the borrower accepts the letter of intent. Once that happens, it goes into processing. You'll have this slide in front of you after the session, so I'm not going to read all the details on the right side. Processing, what happens is, all those third-party reports and appraisals and all that good stuff happens. Get the full file in, send it through our review or underwriting process. When we're comfortable that everything is satisfied, we're going to put it in final underwriting, and then hopefully we fund it, of course, and that's the key. So if you add up that time frame on the screen there, that's ambitious if everything happens in that time frame. But to set proper expectations, I would say we typically can close a small balance commercial loan in 45 to 60 days. We strive for 45. For DSCR, that can be faster. 30 to 45 days might be a good expectation to set. But again, we understand that in this marketplace, some of those sellers have a lot more leverage than others. So certainly don't shy away from us. We'll see what we can do if you have a tight window. But just for the sake of setting proper expectations, the better the lead time, the more lead time, the better.
And you might, if you're new to commercial, you might be wondering, hey, like what's taking so long in some of these areas? Big part of it is the appraisal, which is just so different than commercial space. Obviously, it takes weeks to complete. more expensive. The appraisal, other third-party reports play a big role, and just how fast we're able to get documents and information from the borrower, from you, it all plays a big part. But yeah, the appraisal piece is one of the more unique aspects of the transaction. I always want to touch on here that, of course, we run surveys following every single closed loan. So every broker, if you've done deals with us, you know this. You get your opportunity to tell us what we did right, what we did wrong, and we take I know I look at every single one. And so what we see more like often anything else is just high marks on the responsiveness. And so with the processing, you have your processor, you have your closer, you have various team members and our operations staff that are working with you throughout this transaction. And what we find is that people really develop strong relationships there, which I'm very happy to see, because yeah, there are a lot of steps. You might be new, you might not know all the answers, you might not know exactly what's happening until you do it. And so that can be a little scary, and we get that. And so I really like the fact that our staff consistently get these high marks on the way we're communicating, the fact that you know what's going on at each step. That's one of the things I really like about Silver Hill. So hopefully, you test us on that and you see that for yourself. So Joe, I'm going to take over here and just really quickly give you some ways to get started. So first and foremost, let's create that relationship with your account executive, your regional manager with Silver Hill Funding. So if you follow that link, you'll go to a web page that will have this information, which is, these are all of our account executives, but more importantly, contact information so you can reach out to them. What we do is we show you where they're based. Now, we work with everyone everywhere, but it's helpful sometimes to know where this account executive is based personally, so you can kind of make that connection, make the relationship with someone who understands you best. So highly recommend you do that. If you already have your partner, then that's awesome. If you did but you forgot, or if it's been a while, we encourage you to do that again, so we can make sure we've got someone helping you and working closely with you. These are experts in the area. They can save you a lot of time, because you just don't feel like you have to have all the answers before you can do commercial loans, when you've got your buddy over here who is filling those gaps, helping you get to the finish line, and all that. So maybe that's step one. How to close. Well, you need to issue an LOI. This is the type of information that account executive will give to you, especially when you first present the scenario. But I like this just to kind of give you an idea. And maybe the best way to think about this is to have this list in the back of your mind or on the top of your desk when you're talking to a prospective borrower. Because there's a pre-screening that kind of needs to happen as you're learning, or as you're kind of finding out whether this is a good fit for us or maybe for someone else, a different type of lender. Maybe it's a hard money loan, it's not really for us. When you're in the midst of collecting this type of information, I think that becomes clear. And so obviously it's important because we need it, but it's also important because I think this is a good checklist just for your own use, even if you're not going to bring a loan to us, just understanding where this loan might fit best. So with that, how to submit. And so we know that we've got a kind of a large group here with us today, some loan officers who have come from the residential side through Lakeview Wholesale, which is now Silver Hill Wholesale Network. Some brokers, of course, who've been working with Silver Hill for a very long time, and some who are kind of new to everyone. And so there are a couple different ways to get started. If you're an approved residential loan officer with us, the beauty of working with Silver Hill is that you do not need to get approved a second time or anything like that. That talk about a time saver, right? So that's good. And so you have your partner there. They can help you get started. When you're talking to an account executive about a scenario, know that a small balance commercial loan won't be submitted through our Helm portal, just because that's for residential loans, obviously. So the process is a little bit different. And so the most important thing you can do is call or email your account executive and say, hey, guess what? I've got this loan. It might be a fit for you. And just start that conversation. If you're a Silver Hill Funding commercial broker, I think you know what to do. But if you don't have a partner already and you don't have that person on speed dial, like I said, the best thing would be to email one of us, which will give you our information. In fact, you can see Joe's at the bottom of the slide. But reach out to us or go to our website and find the account executive closest to you and make that connection that way. It's the fastest way, which I think is fast is always what we need in this business. And finally, new brokers. Don't know anyone. you found out this on LinkedIn or Google or through some kind of email, contact Joe Altamonte. He's been on this call with me. I have his email and phone number there. Of course, my name is Zach North. I work in marketing here at Silver Hill. You can reach out to me too. And what I might be more helpful with is pointing in the right directions to the marketing materials and things like that. My email is znorth@silverhillfunding.com. So I'd be happy to help you as well. So really, I think that was what we want to discuss. You have our information here. There are multiple ways to contact us. You can see silverhillfunding.com is our commercial site. If you're interested in our residential solutions, which include non-QM products, you can always find out more about that at shwholesale.com. And so we have these two resources for you, and of course our phone numbers. Joe, I'm just gonna, I see we're kind of limited on time, so I'm gonna pop up this question here and run through a few, if that's okay with you.
That's great. I think
So,
that's a good.
yeah, right. So really quickly, my favorite, are you gonna provide this deck? Yes, we will. We will give you this presentation in the recorded format tomorrow in an email. I'm gonna put it on YouTube, put it on our website. We're gonna send you an email, so you'll definitely have it. So don't feel like you had to take notes throughout this thing, which I think is good. Let's see. So one is about specific LTV based on a scenario. And we get a lot of these questions, which I love because it means that you have deals. And what we always say there is the specific questions are the best fit for that specific person you're working with at Silver Hill, your rep. But also I collect all these questions and I give them to our team to make sure someone can reach out to you proactively with an answer. So if you've given a specific question about a scenario, like, hey, I thought this was possible, but now I'm seeing this, like, what's the deal here? We can help you with that, and I'll make sure someone answers. I have a question about eligible properties, about like churches, like religious buildings, things like that. Typically, that's not going to be one of our eligible properties. And furthermore, like other types of special use properties that are really used for one specific purpose and can't be used for anything else are generally not going to be approved. That list we have is really the list, and we don't really take exceptions in that area on the types of properties. Joe, I'm just going to look for a few more. I know we only have one more minute.
Zach, I'll add something to that last answer.
Yes.
Just in addition to what Zach said, our AEs typically have some referral sources for our most common ineligible properties, like churches, like construction, fix and flippers. So, in the course of your conversations with them, you can always get a referral source or two out of them for those properties.
Right. So thank you. I have two more quick ones, and I know we've got to go. One of the questions is, hey, like, where can I get all your rates? And so that's a great question. We have rate sheets available for you. Our rep will be happy to deliver that to you. In the commercial space, kind of unlike residential, we don't have these kind of huge matrix guideline documents. It's more about something that you'll kind of work with your rep to discuss, because there's so many different programs available and so many different options that you kind of do need the help to understand like where this rate fits best and what's applicable and what kind of rate is achievable or not. So again, recommend you reach out to your rep. Last question, where can I get social media tools? And so we understand how valuable that is. We're very much into LinkedIn, and we know you are too. And so we produce regularly different types of LinkedIn graphics that you can customize yourself based on our programs, based on other things like that. So you can get those. We have those available. We deliver them through email. I have them available if you reach out to znorth@silverhillfunding.com. I can help you. And of course, we have links on our site too to help you get those materials. We're constantly creating new ones because we know you always want to be creating new posts, and just 3 or 4 is not going to cut it today. We got to be posting all the time like everyone else is. So we'd be happy to go through. Joe, before we sign off here, someone's asking for next steps. Like, hey, how do I find prospects? Like, where do I find my first deal? Like, I think what you're going to see from Silver Hill this year, especially now and in the near future, is a lot of educational content about how to grow your commercial business. So as far as like coming next upcoming attractions, I think we're going to be sharing lots of kind of next step tips, where to find your opportunities, what kind of deals should you try first, how do certain aspects work. We're really committed to teaching you everything you need to know so you feel very comfortable doing commercial loans with us. And if you do commercial loans, what we want to give you is all the tools to market better, to promote better, and of course, give you the best product so you choose us more often. So really, that's it, Joe. All from me. Anything that you want to add before we let everyone go? I think not. So everyone have a great day. We'll see you soon. Thanks so much for joining us. Please come back to me. We want to hear from you. Have a great day. Bye.
Thanks, Zach.